There were 87 new insider trades filed. 95% of those are going to be totally useless. So let's go take a look through them to find the few that are high signal and can help us outperform. Now, looking at the daily data, we actually see a pretty massive ratio here in terms of the percent of trades that were buys versus sales. Almost a third, or exactly a third of them that came in were buys. So that's quite a bit higher, obviously, than what we've seen in a while. However, it is pretty similar to what we saw sort of back in like the August timeframe, where stocks did perform okay going forward, but we were sitting pretty low, and especially as we kind of go into this, where we were seeing these larger numbers were sort of coming out of earnings season, which is more what you would expect. Don't normally see it when we're going into earnings season, as a lot of insiders start to enter blackout period. So we'll see if we maintain this kind of more buying, which, you know, would definitely be bullish, or, you know, most likely it's just going to be a one-time blip and we'll kind of fade back down to where we were before. But definitely something to keep an eye on, as slightly more bullish last couple of days than we've had for, you know, the last month or so. So let's go take a look at CEOWatcher.com. We can flip this to bullish. Let's go pick the most recent date here, and then we'll look at purchases, and we will look by transaction value and see if we can find anything interesting. Starting at the very top here, RA Capital Management buying PepGen. Says it's not part of a Form 4 filing. If we take a look, it doesn't actually tell you that this is part of a purchase offering or like public offering, but almost certainly is because of the very even dollar amount. So you see 320 there, and then you see the $30 million here. And then if we look at the chart, we can kind of verify this. So we've got a biotech company, obviously just had some killer readouts, it looks like. Let's see if they tell you. Yeah, so they had some sort of readout, highest mean splicing correction reported. So this was obviously good readouts, came out about the 22nd to 24th, somewhere in that time frame. 24th it looks like. And then they announced a $100 million public offering, which, you know, always is what the biotechs are going to do after good readouts, and that's what this purchase is from. So we tend to, not super interesting, those public offerings like that. So moving down, we'll look at MBX in a second, but we can just look at this, you know, a good gig. We always say this is a good gig if you can get it, but we've got Opendoor, obviously one of the most popular stocks right now. We've got a director buying the stock for the second time, who's now bought it, you know, up at $9.50 and buying again at around $8. However, if you kind of go in and look, part of a purchase agreement, right? The reporting person purchased the shares pursuant to a stock purchase agreement, and guess what? They gave him stock at $6.65. So, I mean, anybody, even I would buy Opendoor if I could get the stock at $6.65 when it's trading at $8 right now. I'm not really sure why they signed this purchase agreement or why they think this director should be able to buy stock cheaper than everybody else, but kind of what's happening there. So again, not an interesting trade. However, good for this guy to be able to get himself a nice little discount there. Now let's look at MBX Biosciences here. Let's see what we have going on. Director buying the stock. Looks like they must have had some good results come out as well, which then means I would double check the same thing here actually that we saw with PepGen to see if we have $18 exactly. Ridiculous amount there, number of shares. Again, not mentioning that it's part of a public offering, which is kind of unusual. Normally they would put those in the footnotes there, but this almost certainly has to be part of a public offering because the stock had popped, and that's just what they do. Announces pricing of upsized public offering. So yeah, almost certainly what that is. So again, not super interesting, those public offering ones. We do move on now to what will be the first interesting one, United States alimony or antimony. You know, a rare precious metal here, which has obviously been part of the Trump administration's push. Also, I believe the only antimony producer in the United States, or smelter, whatever they are, you know, they are the only ones in the United States. So they've been signing a bunch of contracts with the government here, which we'll go take a look at. But if you can look, I mean, just an insane chart here. So this is the CEO buying the stock, buying $600,000 of the stock. Obviously, pretty sizable purchase. Historic returns not as good, which is mainly from way back here in 2022. He was buying the stock when it was way down in the 40 cents range, and then the stock fell afterwards. But he did buy again in 2024, at the end of 2024, and the stock is up 300% since then. And you know, this is a much bigger purchase. So this is the biggest insider purchase ever at United States Antimony. The stock is up 800% in the last year. Just almost never see, I mean, one, you never see stocks up 800%, but then you never see an insider buying the stock when it is up that much. Stock's already up 11% today, which we'll go see is due to, I mean, partially due to that insider buying, but then also they just continue to sign contracts nonstop with the U.S. government. So they were awarded a $245 million 5-year contract by the U.S. Defense just literally a week ago, and then they just got their first delivery order for a $10 million one from the Department of Defense, and then they also, in this, they mentioned they updated their guidance, so they're going to double revenue, they're guessing, or over double revenue at the end of next year, by next year. And they say the two reasons why, based upon two new events. First, during the month of September, they received all prior requested mining permits from Alaska, and second, our international procurement efforts continue to accelerate. So this is, I mean, as clear of a momentum case as you can possibly get. You've got the Trump administration and rare earth minerals being a thing. You've got them being the only, and then also antimony is very used in the area. You can say they operate North America's only two antimony smelters, which have been processing antimony for decades. Not only Trump administration about, the rare earth minerals, but then on top of that, you've got the Department of Defense and Trump's push around the defense. The Republicans in general and Trump especially are going to spend a ton of money on defense, and antimony is very important for that. You have the continual order flow of contracts coming in from the government. You have obviously the price is on an absolute tear. You've got revenue estimates coming in way up, going to double over the next year. So all of that to say, the stock's not cheap, obviously, going up 700%, but this is clearly just a momentum play. And seeing an insider buying the stock when it's already up this much is pretty interesting, and would probably hint at this momentum not slowing down anytime soon. But, everything for the stock is kind of heading in the right direction. Obviously, risky in terms of that. If the market does turn around, stocks that are up 800% are going to be one of the ones that get hit. But these guys are on a roll, and there's not much else to say there. Crushing it recently. What else do we have here? We've got Integrity Specialty and Insurance Company, it looks like. So this is just they just IPO'd back here in June, it looks like. And so some post-IPO buying, we tend to just ignore that. There's not a ton going on here. Cooper Companies, I believe we looked at yesterday as well, but we can, for the same purchase because it came in so early in the day. But look at this. I mean, the stock is way down, 30% in the last year. If we look at insider buying historically, we will see that a handful of insiders have bought the stock now. 5 different insiders have now bought the stock in the last month. If we look historically, the only previous times they bought were back here and then back here. So, and obviously both of those were at relative lows, and the stock went up quite a bit afterwards. On top of that, we can just do a quick look at the numbers here. Earnings estimates actually heading in the right direction, while the stock is very much not heading in the right direction. And then if we look at the valuation numbers here, they're trading at EV/EBITDA, probably makes the most sense to use here. Could use PE too, but tell the same story. They're trading at massively low valuations. Way down here. Now, obviously, the tariff concerns and something has to change for, this stock to start to turn around. But I'd argue that maybe, insiders now, the stock has been low and getting hit for, since the beginning of the year, really. And insiders are just now starting to buy. So I think they might be signaling, hey, these tariff concerns and some of the organic growth concerns and stuff, getting a little ahead of our skis here because we are trading at such a low valuation. You've got insiders stepping in. I think, this is clearly a turnaround play. Pretty high signal purchases, in my opinion there. Lastly, let's see what else we want to take a look on the purchases. We can look at, I tend to avoid these income funds, these business development corporations that are, basically loaning money to businesses, but a whole bunch of insider buying, as we can see over here. Bunch of insider buying, which we can see no real insider buying before. However, that was because the company just IPO'd like about a year ago, not at the very beginning of this year. There was some insider buying right at the IPO. The stock obviously has fallen quite a bit since then, about 15%. And now we're seeing a handful of insiders stepping in buy. We've got 5 different insiders stepping in to buy. This is not interesting to me, these kind of companies. I tend to avoid these business development corps, very reliant on kind of the macro economy, very reliant on interest rates and that kind of thing. But this one has a very clear story, at least, which if that's what you're into, they're going to have a huge dividend, a 10-11% dividend right now, as that's kind of the main way they pay out. So you can, obviously, if these work, you can getting 11% dividend, and then if the stock goes up at all, your returns can get decent. But these stocks tend to not be super volatile, and they, so they should be less volatile. I mean, in this case, they've kind of been all over the place. But the 10% dividend, and then the story here, which we can see here in the transcripts, we'll just do a quick, the whole story comes down to investment strategy shift. This isn't quite as interesting, but they're saying they're transitioning to focus solely on private loan investments for new portfolio companies, and then they're ceasing new investments in the lower middle market segment. They increase liquidity and debt capacity, but here's the big one right here: regulatory leverage expansion. So right now they're running at really low. Let's see if they tell you. So they're running at a really low net debt to NAV ratio. So this is, these companies need to run at much higher leverage to generate any good returns, and running at below a 1 is just wildly low for a company like this, much lower than they want. And they want to get up to 8.5 to 9.5x, in the near term, but they're actually going to expand above 1 in next year, which is kind of more in line with where you'd want them to be. So they're going to expand to 1.15 to 1.25 in January of 2026. And that's because they're going to get their regulatory leverage limit's going to double up to, I think, 2x. I guess I don't actually know exactly what it's going to go up to, but that'll allow them to then go up to that 1.15 to 1.25x range, which will then allow them to juice some more returns. Obviously, if you're able to loan out a lot more money, you can get a lot more money coming in. The concerns with this are, so that's obvious, that's the whole story right there, is that if they're able to increase their leverage and then find enough deals to actually utilize this new increased limit, they are going to be able to bring in some more money and the stock price should go up. The whole concern basically, so leverage and portfolio growth expectations, and analysts ask how realistic is it to reach higher leverage levels in the 90s by year end, and they say basically less confident than 6 to 9 months ago due to slower activity management, but they remain optimistic. They also mentioned somewhere in here, the two main things here basically are they going to be able to find enough deals at prices that they want to do them at to be able to utilize this leverage limit? And they basically said, we're getting there a little slower than we were hoping. And then secondly, they're going to maintain pricing discipline, but they're basically hinting at they may concede up to 25 bips on high quality deals. But again, both of these two, the fact that they're too slower than they wanted to get to the leverage ratio, and then the fact that they may need to give up 25 bips to win some deals, would show that deal flow is struggling a little bit more than they would expect. So that's the risk. Benefit or the bull case is the insider buying paired with that leverage ratio going up, being able to juice returns here. The bear case being not being able to find any of the deals that they need. But pretty, like I said, not my type of company I like to invest in, but a pretty clear story. And if that's your thing, more of an income play there, a dividend play, then could be interesting. Moving over to sales, we continue to see V3 Holdings sell Cipher Mining. They've sold almost $300 million now. Had no effect at all on the stock price, as super popular stock that just continues to go. We've got a bunch of 10b5-1 sales here. Precigen, this one I'm just not really sure what's going on here. They had some sort of good trial results. They then obviously announced some IPO, or not an IPO, but announced an offering to raise some money, which is what all biotechs do. And then we've got some selling, and then we've also got some buying. So you've got insiders both buying and selling the stock. Kind of just a muddy story there. Not 100% sure what's going on. Also, biotech, not really my field that I know a ton about. I more like to pay attention to the pre-catalyst biotech insider trading to see if an insider might be buying, with good news coming down the pipeline, not necessarily post the news coming out. So moving on, we've got a bunch more 10b5-1 sales. Now, a pretty interesting one here is Casey's General Store, where we saw a bunch of sales back in June as well, which obviously didn't affect the stock at all, as the stock is up over 10% since then. But we saw a bunch of selling, and now we saw just another sale here by the chief HR officer, selling $2 million of the stock, which if we just go take a look, let's see how big that is. So about a normal size purchase for him, which historically speaking, this guy has not timed his sales particularly well. Looks like this is actually his first sale, or these are only his first 2 sales here. So let's go take a look when he was at Tractor Supply Company. Let's go take a look what was going on there. So didn't time the sales I guess in the short term they went okay. The stock went from 18 to 13, but kind of got bailed out by COVID happening. So really more like 18 down to 17 maybe. So not really good timing back then historically, but again, now selling the stock here, a slightly smaller sale than when he sold back in June. However, the story here is simply an overvaluation story, which, no shortage of companies in the market right now that are overvalued, but you can see the stock on a tear quite a bit above the 200-day moving average, but earnings per share estimates have, jumped up a little bit. I guess they're not really any that much higher than they were at the end of last year, but have gone up a little bit while the stock price has gone up a ton, 50% in the last year, while, earnings per share haven't gone up that much, which you can then go pretty easily see here by the fact that, again, probably use EV/EBITDA or PE maybe on for a consumer staple, but I don't know if I'd really consider Casey General Store a consumer staple, or EV/EBITDA, but regardless of which one you use, the price is going to tell the same story, or the multiple is going to tell the same story. Just at insanely high multiples, crazy highest ever seen. So a very expensive company. They're growing a little bit, which is obviously obviously something, they were growing a little more in 2022, but, revenue growth has been probably, somewhere around where their median of the last 10 years. I don't know, maybe slightly above average. We can see earnings per share and earnings per share estimates have been heading very much in the right direction, which is a little more relevant for, companies with PE ratios. So earnings have been heading in the right direction now for quite a while, which I don't know if it really justifies the price, especially since we are looking at, the next 12 months. We're looking at, forward valuations, not trailing valuations. So even with the improving growth rates and stuff, we're still seeing wildly high valuations that, that growth's probably going to need to stick around for quite a while for that to make sense. So I think not a company I personally would be interested in owning after seeing some of this insider trading. I think, potentially an interesting short candidate here. The main concern just being their earnings are heading in the right direction, which, this could be one of those ones where you could probably wait for it to actually roll over a little bit and see, earnings start to come down a little bit. And then, because it's going to have a way to go once those earnings turn around. It's going to have to fall quite a bit to get back down to historical levels. So, or just obviously if you just want to make a play on like general consumer weakness or something, or you want to get a basket of overvalued companies, then this might be one to add to the list there. So I think that's an interesting insider sell for sure. Bunch more 10b5-1s, 10b5-1s. What do we got here? General Motors. Now we've seen obviously another company where just like if the consumer gets hit, General Motors is going to get hit. We've now had quite a few insiders selling the stock here, actually, as you can see, including both the president and the CEO selling the stock, with the stock up quite a bit in the last couple of years. Let's actually just go take a look. What is GM looking like? Forward estimates actually coming down a little bit while the stock price is getting way above, the 200-day here. So we're getting, very high momentum stock, but getting, maybe a little overextended there. If we look at some historical ratios here, we are getting, I guess PE probably makes the most sense for these guys. So they're actually not, the play here is not necessarily that they are overvalued right now based on the numbers. It would be that they would be overvalued if the earnings come down. So a little bit different of a story here than Casey, where Casey General Store, the stock was wildly, I guess, hard to say exactly if something's overvalued or not, but just historically speaking, valued very richly, so even without earnings coming down, they're very expensive. In this case, not necessarily expensive, but if earnings do come down, then the company's going to be quite expensive. So again, more of like a consumer play, if consumers stop buying cars, or tariffs, I guess, if tariffs, come in and cause big problems, then any of those could cause some issues here. And there have been obviously quite a bit of insider selling, as we said, recently. And the insiders do, they sold at the last spike too. They tend to avoid when the stock's really low. They're not going to be selling, but historically speaking, not the greatest insider sellers. But, there is a bit of a story there. Now, Costco is probably a good one to end on because we have a very similar, we're just kind of going through the same exact stories here. So we've got an executive vice president selling the stock. Now, historically speaking, again, in all of these cases, we would be much more confident in, a sell rating or like shorting these stocks if these insiders had much worse track record or much better track records, but they have pretty terrible timing, historically speaking. In this case, though, obviously, Costco is going to be even a little different story than both of the other two, because in this case, the stock price is not doing the same as what everybody else has done. It's very flat over the last year. Pretty much it has recently fallen below the 200-day moving average. Earnings estimates have flattened out quite a bit. We then go look at, historically speaking, on the top end of the valuation ratio, so not as expensive as, this one's kind of in the middle. It's not as expensive as Casey General Stores, but Casey General Stores is growing. It's not quite as expensive, but that's because obviously Casey General Stores, well, one, they're growing a little faster. The estimates were increasing a little more just based on the chart. I didn't actually really look into the numbers, but it looked like they might have been increasing a little more. But the stock price at Casey is very high momentum and heading in the right direction, whereas Costco's has flattened out. And so because of that, you've seen also their multiple flattened out. And so actually a historically expensive company, Costco is, they always trade very expensive, but we're talking now they're actually expensive compared to themselves historically, and still at the very top end of the range here, without at the top end of the range without the strong price momentum that a Casey has had, and then obviously more expensive, also a much less strong price momentum than what General Motors had, but trading at a much more expensive valuation than General Motors. So they're kind of sitting in between both of those, even though all of them have a similar-ish story in that like tariffs could cause some issues, but the big concern is really just the consumer, have the consumer having issues here. So all of them different plays. Honestly, if I had to rank the three, I might say Costco is probably the most interesting as a bearish, or potential short or a sell or whatever you want to say play, just because they don't really tend to have as much buying as like Casey does, which obviously from a valuation standpoint, I think Casey's is very interesting interesting, but I'd like to see that momentum start to roll over a little bit. And I think that one has much more downside. So you could probably wait a little more on Casey's than you could wait here, because I don't think there's quite as much downside at Costco. But I think just overall, not a very strong chart at Costco, not very strong data at Costco, and overall pretty expensive. So I think that is also all three stocks, very similar stories, slightly different prices and valuations and stuff. But you can go to CEOWatcher.com and see all of this for yourself. Don't forget to like and subscribe, and we'll see you next time.